Past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank. Hey everyone, Daniel Snyder here. This is ETF Spotlight. Thank you so much for joining us for another episode. I am really thrilled for this episode. We are diving into the ARK Fund, ARKW, with the one, the only Nick Grous, who is joining us here today. Nick, I have so many questions. Obviously, ARK is a real competitor in the space. We all know who ARK is, but for those who don't, I want to say thank you, introduce of the fund. Let's dive into ARKW though. Next generation technology. How did this fund kind of come around, and what's the strategy here that makes it so different than all the other ARK ETFs?
Yeah, first, I want to thank you for having me on. Very excited to be able to talk about this fund specifically. And to answer your question, this fund is focused on the next generation of the internet and the trends, convergences we're seeing in this new age of digital connection. And so this fund is really looking at the convergences between AI, smart contracts, blockchain, you name it, this fund, if it touches the internet, this fund is looking at it from a technological point of view and trying to understand how the internet is going to look in the next 10, 15, 20 years.
Maybe you can paint the picture a little bit better for people, because I think everybody hears the words blockchain, smart contracts, AI, and people are like, okay, well, is this just a VR world, or what should people be painting the picture, I guess, is a lack of a better term? What should it look like, or what do you think it'll look like?
Yeah, I think when it comes to the internet itself and how this fund is positioning to capture the upside in the growth of the internet, it's really important to focus on the subsectors and the technologies pioneering this. So I mentioned, you have intelligent devices, you have next generation cloud, neural networks, blockchain, smart contracts. And to really answer your question, what does this look like? One, we think there's really three main things to focus on here. First being convergence, understanding how AI is going to embed itself into consumer-facing platforms, how crypto technology will also help and drive AI adoption or vice versa. The second is convenience. We think that the internet is becoming more and more convenient each and every single day. And again, come back to AI here, understanding how this is going to influence and change the way we individuals interact online. And then the third one, and I think you touched on it in your question, is immersion. The internet is getting more and more immersive every single day. And so you'll see names throughout this fund that are focused at the platform level across consumer, enterprise. You have digital assets when we have introduced ARKB into this fund. We have an Ethereum asset as well in here. So we're really trying to understand the convergence, the convenience, and the immersion that the internet is pushing towards.
Now, a lot of investors, a lot of watchers right now might be going, well, how is this going to affect my personal daily life? Right. And I know there's conversations around robo-taxis or smart glasses if you're looking at Meta. What are you guys kind of thinking about in that regard of how it affects individuals and maybe boost productivity or efficiencies or just change the way that we live?
Yeah, this is a great question. I want to focus on that buzzword AI because you brought up robo-taxis, you brought up Meta. These, Tesla, Meta, these are names that are in the top 10 of this portfolio. And it's really about understanding how AI is going to drive what we think is going to be the biggest economic and business boost we've seen from a technological lens. We're looking at just on the enterprise side alone, when we look at AI and what it's able to do on the coding, assistance, everything that it's being used for at the workplace, we think that there's a $7 trillion opportunity out to 2030. And so we're looking at names that are helping push that forward. What we're seeing is really unheard of. If you look at some of the benchmarks when it comes to coding specifically, I'll give you a very clean example. Look at coding. Think about how much of the world today has to be coded and developed using software engineers. What we're seeing is that we're moving from assistance to agentic coding tools for the workplace. And we've seen these benchmarks go from 10%. So when you look at the ability of these large language models to beat the benchmark, it was at 10% earlier this year. Now they're able to do almost 70% of the tasks that are introduced into these coding benchmarks. So you're having almost full-fledged software engineers, or the capability of those, being introduced into the workplace. And so we think that this is not just going to enhance businesses, but it's going to enhance employees. Imagine the productivity lift. GitHub gave numbers, 50% time saving when you introduce AI coding assistants. So this is a massive boost to productivity for businesses and the economy. That's just on the enterprise side. We can go down the consumer rabbit hole because we think that we're going to be living in the next 5 to 10 years. Every single individual is going to have an AI agent or a digital assistant in their pocket, whether it's embedded in the smartphone, a pair of smart glasses, like you mentioned. That's going to drive massive adoption of different technological innovation that we have never really even seen. We're not even in just the first inning. We're in the first pitch of this trend, of this S curve.
Nick, I got to ask you how the team, because you brought up coding, how is the team over there are thinking about, the bad actors of the world who might be trying to leverage the AI technology for cyber hacking and in that regard? I mean, is there any worries about that front?
There's always worries that you're going to have bad actors, but I think when you have two avenues that are being pursued, one open source, one closed source, and we can go through the players that are pioneering each of those spaces, Meta being on the open source side with Llama. It's good to have those tools in the hands of everyone, because if bad actors are using the same tools as good actors, there's going to be a constant tug of war, but we'll be able to combat the bad actors with the same tools that they're using. So I think it's good to have this debate. Obviously, we have to see how it's going to be used, and I would expect that cybersecurity as a sector continues to get looked at, because you have to have continuous battles in the back end of the internet, fighting good versus bad. And we have some cybersecurity names in here that are, looking at that space. And so, we think of this on an almost daily basis. We have a Friday brainstorming session. We're constantly talking about this. It's a very interesting topic.
Yeah, love that. Let's talk about the performance of the fund. I mean, last year alone, 2024, massively outperformed the S&P 500. How does the fund do it?
Yeah, so I would say it's a testament to sticking to our guns and not straying from our investment strategy. I've been with ARK coming up on 7 years, and I can say through the entire time, we've always had the same philosophy, which I think, ends up showing up in our performance. And that's really around concentration. So we will typically concentrate into our highest conviction names in periods of risk off market volatility. So when our names are out of favor, we're consolidating, we're looking at our companies, and we're saying, where are our highest conviction names? And let's put more to work in those names. And then as our strategies become more favorable to the market, as the market starts to warm up to higher risk growth, we typically will begin to broaden out the portfolio, look at new names. We've had a very soft IPO market. We're expecting that to change over the next year as you see a number of different late stage private companies coming to market. And those companies are just as innovative as on the public side. So we're excited to be able to look at those companies from a public lens as well.
Let's double click on that. That surprised me right there. You're expecting more IPOs. I think there's a lot of fear and whispers out there about people that need capital are just going to the private equity market. So what's the case for IPOs? What do you guys see?
I think if you see the market begin to broaden out and you see investors looking at higher risk assets, that's going to attract more of the private market to come public. I think they're going to look at the IPO window and say, hey, we need to deliver liquidity to our investors, to our employees. The market is more favorable to higher risk assets at the moment. And so us as a private company, this is a great opportunity for us to get into the market and get the share price we believe we deserve.
Amazing. Thank you. Going back to the fund performance and your strategy that you were just talking about reducing exposure during times where it's risk off, for lack of a better word, right? You have such a concentration within the top 10 assets held in this fund. So, how do you kind of anticipate when we're going from risk on to risk off?
I think you tend to see it. I mean, we have constant conversations internally, and you look at the performance of the broader market. You look at the concentration in the broader market. Look at the rally in the S&P 500 and the Nasdaq. A lot of that has been driven by just a small number of names. You're looking at the Mag 7 driving the large portion of performance. And so when you look at the broader market, that type of performance hasn't been there, and it hadn't been there for our strategies, entering or exiting the COVID period. And so that to us was a signal that investors were being skittish towards high risk growth. But we think that last year was potentially a turning point for the strategies in terms of how investors view higher risk assets. So that, is a constant conversation internally. I wish, there was a demarcation point and we could say, okay, we're in risk off or risk on, but it's typically something you have to feel your way through.
Yeah, don't we all? I wanted to ask you though, so we're talking next generation. What emerging technologies are you all focused on that might be rotating into this fund in the future?
Yeah, so I would say, we have a long history of identifying technologies. We have 14 underlying technologies that we look at very closely. As far as new technologies, I think it's more a conversation of how our current technologies are changing. How are our companies that are introduced into this fund taking advantage of some of the large language models we've seen come out, all of this news around AI. I mean, I feel like I'm a broken record at this point, but AI really is going to change everything about our global economy and the businesses that are help shaping it. And so we're looking, I touched on the enterprise side, so let me go into the consumer side because I think it's just as interesting and it's probably an area most people don't really understand yet. We have a long history of looking at the digital wallet space at e-commerce companies, and we think that as you build up a digital assistant, as you have this digital assistant in your pocket, one thing that could be really interesting is how does that help shape your preference as a consumer to go out and purchase? So a term that we helped coin over the last year, we have a blog on it, is called purchasing agents. We think that you're going to be able to, as an individual, go out into the market, ask an agent, hey, I want the best price for X type of product. I need a car service right now. And not only are you going to get the best price, but it's actually going to be able to look across different marketplaces. And so this is a really big idea that I don't think many understand yet because it disintermediates marketplaces. And we think some of these digital wallet companies that are in W, you have Block with Cash App, you have Robinhood, you have Coinbase, all of these companies are pushing towards digital wallets, helping consumers make informed financial decisions and payments and purchases. They are really one true app for all of your financial needs. And we think that they're perfectly situated to introduce agentic capability when it comes to a consumer and its want to go out there and purchase something in the market.
So, to begin the year, we've seen a massive pop in story and headlines about quantum chips, quantum computing, quantum this, quantum that. Do you see the quantum side of the industry, which some are saying is still 15, 30 years away, being a new factor for the internet and maybe how fast or the AI technology and everything that we've been talking about today?
Oh, wow. I had hoped you would bring this up because I think it is such an interesting space. And, I'll go back. Our team does a wonderful job at really trying to look from a first principles perspective of how this is going to shape or when is this technology ready? A lot of our research is focused on is this now the time for this type of technology? And this may be counter to what many in the market believe, and especially what we're hearing from companies like Google and Microsoft that are looking at this space. Google's introduction of Willow and everything that they've put out into the market that really spiked this excitement. We actually have a slightly bearish take on that this is from a commercial perspective not going to be ready for the next 10 to 20 years. So for us, from a commercial perspective, quantum isn't yet that interesting.
Interesting enough, right there. So, in your view, in the firm's view, what does the next generation of the internet really look like? Maybe we dive into a few additional subsectors that we haven't talked about yet.
Yeah. I would go back to the three, terms I threw out in the beginning: convergence, immersion, and convenience. I think when you look at the internet and what is happening, you look at all of these different platforms, whether it's in the gaming space, whether it's in social media, whether it's on the enterprise side, you're starting to see these larger companies begin to roll up individual solutions and solutions that were built by single companies. They're now taking those solutions and embedding them in platforms. And so, if you're an investor looking at this fund, you'll notice that a large portion of the exposure you have are platform companies. It could be platform in the music space with Spotify. It could be platforms in the gaming space with a company like Roblox. It could be platforms like Meta in the social media space. And we think platforms are extremely important because they often deliver more value than they take in. I think, that's a famous quote by Bill Gates. If you're truly a platform, you end up producing more for individuals on top of the platform than the platform ends up having itself. And so we really focus on platforms. We don't want to get stuck in a space. I'll give another example because it's a top position in this fund, Roku. Roku is a platform for the connected TV space. It's not a singular app like Netflix or HBO. Those are actually supported by the platform that Roku has for the connected TV space. And so I would think, when investors go and look at this fund, keep that in the back of your mind because that's really how we're trying to approach the internet, because platforms help pioneer the future of everything that we're talking about today.
Have there been conversations over there about, we were talking about coding and the assistance with coding? It seems like you can kind of create, ideate, and test a new product, a new software almost within a week's time, if not a day or 2 days, right? There's so many people with ideas. And now that the cost of capital to start these new ideas is coming down faster and faster, is there any worry that the tech world might just end up in this disruption spiral where people are just trying to eat at each other's margins?
There is a constant dialogue on this, and we center it around potential commoditization within the tech world. To your point, if everyone or individuals can now spin up startups in a night or a day, and because they're able to code something that would have taken months and multiple employees, how do you have moat? How do you have a moat as a company? And so I think it's important. You have to look at each sector and what makes it, sticky as a product. If you look at certain sectors, distribution is very, very important. If you have a large network of individuals, you have the ability to move as fast as potential new competitors, but you have an advantage because you already have 100 million or 1 billion users. And so if you're able to deliver the same level of product, you have an advantage. So think about incumbents. You have to really listen to them on earnings calls and understand, are these companies approaching AI in the right way? Because if they are, then their incumbency in the market will help them massively fend off newer startups because they have to start from zero. You don't have to start from zero. These companies that we've been looking at that have populated this fund for a number of years, they have massive distribution bases, and those should not be ignored. That's a massive moat in a day and age where the market is as dynamic as it has ever been.
That is a great point to leave it off on. So, Nick, Grous, thank you so much for taking the time to talk to us today. And everyone, we hope you enjoyed this episode of ETF Spotlight. Nick, I look forward to our next episode here in the future where we can talk more about the changes going on within the internet space. But thank you so much for your time.
Thank you.